So that brings me to today's featured guest, who I'm super excited to introduce to you guys. And I also want to point out that almost all of the featured experts or the guest speakers that I bring in are people that I have done business with myself. Amy is vice president with Republic Bank, just a couple of blocks from our office here in St. Petersburg. I have a business credit line with Republic Bank. I have a Heloc with Republic Bank, and I have a commercial mortgage with Republic Bank. And so when I bring these folks to you, sort of bring the team to you, so to speak, these are folks that I have done business with myself, I'm familiar with, and I know will take great care of you. As you can see there, Amy is a commercial lender with Republic Bank. She has over a decade of experience, and Republic Bank itself is really focused on commercial real estate, multifamily apartment, and new construction, and basically all types of commercial lending. And I'll let Amy get into that. So without further ado, Amy, I'm going to attempt to make you the host. Thank you so much, Amy. I'm going to sit back. And I should have mentioned that when we get into the Q&A, everybody stays on mute and either use the raise hand feature or the chat feature. And I'll try to do my best to call on people and have them ask their question, and then we'll go back and forth, and then they go back on mute. All yours, Amy. Thank you.
Perfect. Everybody can see my screen then. Republic Bank, we're all good?
Yep.
Good to go. All right. Jeff, thank you so much for inviting me to this call. As you said, I've been a commercial lender in the St. Petersburg area for over 10 years. I've worked for everything from Wells Fargo to the very small community bank. I would call Republic Bank more of a regional, community bank, but we'll get more into that. So again, thank you for inviting me today onto the call. So just a little bit about Republic Bank. We're located in 5 states, and that's where I wanted to get into a little bit about the difference between a community bank, a regional bank, and then your big bank, your Bank of America, your Wells Fargo. So Republic's located in 5 states. We're in Kentucky, Indiana, Tennessee, Ohio, and obviously Florida. We started in Kentucky back in 1967, and we have a really good following there in Louisville. And then from there, we've kind of expanded into the different states. So we are actually considered a mid-sized regional bank at about $3 billion in assets. So just to compare, Bank of America and Chase are about $2.6 trillion. So I know it sounds like, oh, we're $3 billion. It sounds like a big number, but your big banks are actually in the trillions when you talk about their asset size. So some of the difference with, working with their big bank and we go into lending, your community banks sometimes understand your environment, where you're lending in. So I know all of us are not in Florida, and I'm not saying you're gonna, have a commercial loan with Republic Bank, but sometimes reaching out to your community bank, they're gonna understand exactly your neighborhood, exactly what they wanna lend in. So here I show where Republic Bank is. We have, 7 branches, in the Tampa Bay area. Our bank really doesn't reach much outside of that. Again, we're in 5 states, but if you ask me to do a loan in Orlando, we don't understand that market there. So no matter where you are in the country, going to more of a community bank is often your best bet sometimes to get the loan that you want for your investment property. Some of the things that we offer, just to kind of go down: consumer banking, obviously mortgage loans, consumer lending, treasury management, which is how money comes in and out on your online, merchant services, and obviously commercial and business loans we're here to talk about today. So some of the stuff that I get a lot of questions about, and I know, Jeff, correct me if I'm wrong, that a lot of the people on the call are looking for more multifamily investments, things like that. Is that correct?
I would say that is correct. However, I would venture to guess that many people are very interested in other opportunities because inventory is so tight right now. People are starting to get more creative. I know there's been a lot of interest in things like mini storage, mixed use, retail. So I think it's all very applicable.
All right, perfect. So I just wanted to kind of do a high level of commercial lending for those that are newer or just starting out and looking for some investment opportunities. When you talk about owner occupied, it could mean that your business is taking up 51%. So just for an example, you own a restaurant and it's in a strip center, you're taking up 51% of it. You can rent out the rest of it, but we can call it owner occupied real estate. Investor owned real estate, your multifamily, your retail strip centers. So that means you rent out all the space, you know, whether it's like you just mentioned, industrial warehouse space, which is a great market right now. You know, that means you rent out all of it, investor owned real estate. Another thing we're doing a lot of right now, people have equity in their properties. So we're doing a lot of cash out refinancing. Your rates are 5.5%, 6%, you already own it. We're going to refinance it. We're going to take some of your cash out, and that cash can be used towards your next investment. So that's not a bad idea if you're, you know, not starting out, but you have another property. Talk to your bank about modifying your loan. A lot of us, and me included, I have loans with Republic Bank. People are asking us for modifications. We're doing it at a small fee, but we want to keep the loan. We don't want you to go to another bank. So if you already have financing with someone else, definitely ask your bank about reducing the rate and staying there. We do a lot of portfolio lending as well. And this is when I was talking about big banks to small banks. I would say that some of your bigger banks aren't going to take multiple properties into one loan and secure them, you know, under one loan. So portfolio lending, if you have a lot of single family homes, we can lump them together, give you one loan, take cash out, things like that. Construction loan, lines of credit, and obviously equipment financing and leasing is something else we do at Republic. So just a little bit more high level to talk about financing on the commercial side. A lot of questions I get, you know, especially when people are getting into their first multifamily is, can I get a 30-year fixed rate and term? And a lot of commercial loans are not going to even go to 30 years on their amortization, and definitely not on their fixed rate. So here I broke down just a little bit of like what our rates look like right now. And you'll see at the top, it says 10-15. So the rate means it's fixed for 10 years, it's amortized over 15. The next box is fixed for 5 years, amortized over 20, fixed for 7, amortized over 20, you get it, 25 years after that. So it shows you on a $650,000 purchase, 20% down, what your payment would look like. Obviously, if you have a 15-year amortization, you're going to be able to pay that off a little faster. We're going to have a lower rate for you. You see at a 25-year amortization, your rate's a little bit higher. So the bank's giving you that opportunity. Yeah, we're going to move the rate up a little bit, but you can stretch out your payments and obviously make more on your rental space. And actually, this is an example of a loan that I'm doing right now where I broke their terms out for them. I literally just took my spreadsheet and put it right in here. And they ended up going with the 5-year fixed and 20-year term because they don't know if they're going to keep their property. So just some of the things to know about commercial loans. A lot of times you're not going to see a 30-year fixed. You're going to see a 20 or 25-year. With Republic Bank, we do a 10-year full term. So even though it's only fixed for 5, 7, or 10 years, the full term is always 10 years with us. Loan to value. A lot of times when you're buying your primary home, you hear, oh, you put 3% down, 5% down. With commercial loans, you're going to expect to do at least 20% down. Sometimes you can get away with, 10 to 15, but right now, a lot of banks are, kind of going a little bit further down and want to be comfortable in their loan to value. A lot of times you'll see early termination fees. So always check with your bank where you're going to see if I sell this in 5 years, do I owe you any money afterwards? Always check that with commercial loans. There's origination fees. For those of us in Florida and some other states, we have doc stamps and intangible taxes. And another thing to remember is when we give you that nice payment that I see above, taxes and insurances aren't included like your home mortgage. So with that, I kind of give you a high level of a little bit about commercial lending. Those that were on the call last week, she did a great job breaking down being a residential broker. So I think we can kind of go off of that. And yeah, that's, that's my high level.
That's great. Thank you so much, Amy. I just want to say that I've actually been with Republic since before it was Republic. I'm a holdover from the Cornerstone Community Bank days. And while I kind of fought that at first because Cornerstone was a true small, one county community bank. I think Republic gives people kind of the best of both worlds. You still got that small bank feel, but you're actually a multi-state bank. And I know many of our clients aren't just investing in Florida. There's some great investment markets in Ohio and Tennessee and elsewhere. And so it's nice to have that regional reach, but also have that sort of local decision making to some extent. And I know you've even gone to bat for some of our clients where maybe underwriting came back at 60% LTV, and you kind of argued with them and said, no, come on, we can do 65 or 70. And you're able to make some of those common sense type inputs into the decision-making process that you don't get with the big national banks. With them, it's very cookie cutter. It's this overlay or it's nothing. And so I think you guys kind of offer the best of both worlds. I see Libby's hand. Libby, go ahead and unmute yourself, and you're on the line with Amy.
Hey, good afternoon. Happy Friday, everybody. I had a quick question about interest-free loans. In what world is there such a thing, and what does it look like? An interest-only loan with, I imagine, like maybe 10 years interest only, and then 10, 20, the next 10 or 20 years. I mean, do you all do anything along those lines, or does anyone?
While we're waiting on her, Libby, I don't know if Republic Bank offers interest-only periods, but I do see that occasionally with hard money lenders, and it's not uncommon to do, maybe 1 year interest only, and then your terms, get recalculated into some different type of configuration. And the other place you often see it is with seller financing. If you're able to find a property where the seller will hold a note, it's not uncommon to say, well, let's do 1 or 2 years interest only. From the seller or the note holder's perspective, they're getting interest payments every month, and your principal balance is not going down. So that's a good thing for them. But from the buyer's or the lender's perspective, your payments are much lower because you're only paying the interest portion. And so it's a good way to maybe have that introductory period while you stabilize the property and then flip over to amortized terms on the note.
So I was going to say kind of the same thing. You're not going to see an interest only term for 10 or so years. Where I see it the most is I'm investing into this property and I know I'm only going to own it for a year. I'm going to buy it, rehab it, fix it up. Amy, will you give me a 12-month or 18-month interest-only loan? And it's kind of like a bridge or a flip loan. The only interest-only is doing a line of credit. And to have a line of credit, you're going to use it for working capital. So you own a business. It needs funds to support itself in between pay periods. And then, you use it, pay it back, use it, pay it back. But that's the only time you're really going to see interest only. I hope that answers it, because I know that, Jeff, you kind of answered it a little bit as well, hard money loans, that type of thing. But for the most part, it's going to be a very short-term type of loan to have interest only.
Thank you. That's actually a perfect segue into one of my questions. A lot of folks on these calls, myself included, we own some single-family homes as rental properties, and some of them have, a significant amount of equity. But you can't get a Heloc on an investment property as a general rule. Can you talk to us a little bit about an alternative to that, which might be a secured line of credit if you hold a property in the name of an LLC and use that as collateral for a line of credit? What does that look like, and how similar is it in terms to a Heloc, for example?
Right. So a Heloc is on your primary home, and the bank expects you to use it as, I'm going to use $50,000 of my line of credit on my primary home to build a pool and put a fence in my backyard, or my roof, my house is older, I need to put a roof on it. So that's what they're planning on you using a Heloc for. Home improvements, or you can use it for whatever you want, but that's what they're looking for. On a commercial side, we are looking for a line of credit more of, are you going to use it for your business purpose? So if you're an LLC that is a real estate holding company, your use of those funds is going to be, I'm buying a property, I'm going to then start renting it, I'm going to rehab it, rent it, that's what I'm using my line of credit for, and then I'm going to pay it back. So the terms, I would say, the difference would be same thing. We're not going to have the longest terms that you're going to see in a Heloc. A Heloc, they'll be like, all right, Jeff, you own your home, here's 15 years, that you don't have to come back to us and ask us for more money or give us new financials. On the commercial side, every 2 to 3 years, depending on your bank, they're going to say, we need to renew this line of credit. And so then you have to give us new financials. You kind of go through the whole process again, because we want to make sure you're using the line for the business use, and what we call season the line, meaning you use it, you pay it back. If you had a $100,000 line on the commercial side and you use it to buy another property, some banks would actually have an issue that you don't pay it back or pay it down, because they want to see you working the line, or season the line, as we call it. So sometimes getting a line of credit on the commercial side is a little bit more tedious and more work. So a lot of investors, especially startup or first-time investors, will actually put a Heloc on their home and use those funds to start their LLC. And I'm not a CPA, but your CPA will help you write all of those things off, or use those funds properly, where you're personally giving yourself the loan. Does that make sense? I'm saying that you're kind of using your personal residence as the loan to your business to get started.
Yeah, basically nothing compares to a Heloc in terms of ease and rate and terms.
Yeah.
Mitch has a question. And I have kind of a tie-in to his question. His question is, for someone just getting started in multifamily, what's attractive about commercial real estate? And I'm assuming he means in comparison to single family homes or duplexes. And on that note, a lot of people are under the impression that to get commercial financing on a multifamily property, you need to be able to show experience. They're going to look at the property's numbers, but they're also going to look at the borrower's level of experience. And so for some of the folks on the call, how much experience do you realistically need to show to buy a sixplex or an eightplex? And how does partnering with a local property management company or something like that help the look of that experience?
Yeah. So I've done a lot of multifamily lending recently. Again, I do everything from warehouses and doctor's offices, but for some reason, multifamily has been really a hot ticket, especially in Florida. And I would say that as a bank, and this is coming from Republic, we really like these properties. And especially in Florida, we know the rental market's strong here. So we look at it, and to be honest, it doesn't take much. Again, it takes a lot to run it, don't get me wrong, but the experience doesn't need to be there. I'd say if you have a good credit score, you have some equity in the bank, meaning cash in the bank, you can put a little bit down. The bank is going to look at how the property cash flows first. And especially if you're keeping your other job, are you a nurse, doctor, whatever, we're going to look at your income, but we're really going to look at the property's income. And we're going to say, does this property cash flow on its own? And then we're going to what we call stress the property. We're going to take, is there a vacancy in it? If you have a 10% vacancy, does the property still cash flow? That's how a bank looks at it, is the property or your business, because that's really the business itself, does it support itself? Does it cash flow? After that, if it doesn't, who do we ask next? We're going to ask the guarantor, which is you that's managing the property. If you don't have another form of income, where are we going to go next? We're going to have to take the asset. and banks have to look at it that way. What's our plan of attack if the worst case scenario is going to happen? Unfortunately, as a bank, we always look at worst case scenario. So I'd say like getting into multifamily, especially starting out, 4, 6, 8 units. If you have the means to manage it yourself, great. If not, a management company does obviously help in the lending field, especially when you're out of state. I had a recent situation where the borrowers are in California. The bank just didn't feel as comfortable knowing that they weren't close at hand to manage that property. They weren't willing to put a management company on it. And that was one of the things that we were kind of like, okay, we're not going to go as high or more risk, if you will, on the property. So I think it's all a kind of a balancing act of, are you in the area? Do you understand the Tampa Bay market or Louisville, wherever you're at? And, how much are you going to be invested into it? What's your other income? And what's the income of the property? So that's a big difference between commercial and more of your consumer lending, if you will, where we can kind of manipulate and move the scale to make it work for the bank and work for you. Last week's speaker she was a broker, and she talked a lot about we can go to all the banks and find the best rate and terms for you. And I said that you're exactly right. When you're going for a residential mortgage, a single family home, that's the way to go. But on the commercial side, it's tough to do that because every bank has their pros and cons, and we can kind of move the dial a little bit on the commercial side. So it's not so cookie cutter, if you will. So going to a broker and then trying to find a bank that fits your property. The last bank I was at a year and a half ago, they wouldn't do multifamily if we if we had a 10% rate on it and 50% LTV. Republic Bank loves multifamily. So it's really about finding the right bank for your property and for you, if that makes sense.
Yeah, that's great insight. And Mitch, I'll just add one other thing to your question. What's attractive about commercial, particularly commercial multifamily? And I think if you look at the statistics, they'll bear this out. They almost never go into foreclosure. Even during the financial crisis of 2008, when foreclosure rates were double digits on single family investment properties, for multifamily investment properties, it was well below 1%. And that's why many banks, not all, really love making commercial multifamily loans because the demand is there for rental property. People always need a place to live, regardless of what happens with the economy. And as long as you factor in, the risk based on loan to value and stressing the property, like Amy said, these loans almost never default. And so because of that, they're an attractive loan product for lenders, but they're an attractive investment for investors as well. I do see 2 questions pending. Doug, I think, had a great question. What is a good credit score? We're all used to the residential side where it's very, very black and white. You need a 640 credit score and this and this and this. How do you view credit scores on the commercial side, and how does that impact, for example, the down payment? And then Jordan has his hand up. So after Amy answers that question, Jordan, I'll ask you to unmute yourself and jump in.
Sure. So credit score is always a big deal. And I would say that our bank still has a minimum. I think we have a 650 minimum. Now, just like last week, if you came to me with a 650 credit score, I'd say, why? Why is it a 650? Is it because there was one issue one time and you didn't, pay on something or you got divorced and, things happen in life? When you're talking about residential, again, everything's very cookie cutter. They have to follow regulation, and especially after the housing crisis of 2009, 2010, they definitely have to follow regulation. And that's why sometimes commercial loans, though the terms aren't as attractive, there's not a 30-year fixed rate and amortization. Sometimes we can say, okay, you have a 650 credit score, but why? Okay, so I can mitigate this risk of, all right, I got divorced and I had all of this stuff going on, but I have, a couple $100,000 sitting in the bank. I own this, I have this. So you've shown to, to have assets or something else. You have to kind of mitigate that low credit score, if you will. You can't come to the table and say, I just forgot to pay all my bills and I have this low credit score and I have nothing. We're still going to be in the same situation. But on the commercial side, we can mitigate certain things based on the other plus sides or the business itself. Like you said, the multifamily, the income coming in. As long as everything else is strong, we can still move past a lower credit score. Where on the residential side or consumer side, they're going to move your rate up because they feel it's a higher risk, and that's why your rate is going to be higher than somebody with a 800 credit score.
Thank you. Jordan, if you can unmute yourself and go ahead and ask your question.
Yeah, thanks. Hi, Amy. Thanks for this great information. And apologies if you already answered this, but what amount of cash reserves do you normally look for above and beyond the down payment? And does this vary a lot between lenders? And assuming we're talking kind of small scale commercial, like maybe 50 doors or less. And also, would you apply that criterion if the borrowers, if you got, say, 2 or more people partnering as borrowers, would you apply those criteria to each of them individually or just look at them cumulatively?
So commercial is so, again, it really depends on the property. Like you said, 50 doors or less. I've had, situations where one borrower had all the liquidity, very experienced in real estate, and they were bringing in the second person as a 30% owner. They wanted to start getting into real estate, not as strong. The bank is going to look at the entire picture. So let me kind of go back to your question. There's not going to be a set asset, value or liquidity or what you need in the bank. What I tell most of my borrowers going in, our bank will lend up to 85, 90% loan to value. In this market right now where everything's high, I would say we're not going there anymore because we think that the market might self-correct or at least level out a little bit. So right now, I tell them, I'll put it through for 80%. So I need you to put 20% in. I need to see in your account that you've got that 20% equity. But just know that the bank might come back to us and say, all right, because of this, this, and this, maybe there's not as much cash on hand, or their job's not, they don't have another job. They're relying on this income of this, apartment building. We don't feel comfortable going 85%. We want to be at 75%. So even though I will put the loan in higher, I always make sure that they're prepared with cash reserves to go to a lower LTV, if you will. So I don't think there's a set number that the bank is looking for. I think we have to look for the whole picture and really determine the risk based on the borrowers and the property itself.
Can I just follow up on that for clarification? So like with a regular home loan, a home mortgage, lenders are often going to say, well, I need to see that you've got at least 6 months of loan payments in the bank or 9 months or whatever. So you're saying that's not typically the case with a commercial loan?
No, we're actually not going to, it's not as stringent or strict on, yes, we need to see X, Y, Z. Another great example of a loan I just did, it was a 4-unit downtown St. Petersburg. And she could have gone to a residential mortgage or she could have gone to the commercial side where I'm at. And she really liked the idea of the 30-year fix. The interest rate, probably right around the same, to be honest, on an investment 4-unit on the residential side compared to, an investment on the commercial side with me. And the reason that she actually went on the commercial side was because, again, we're not going to break down your financials of that. We're looking for, does the property support itself? One, if it doesn't, who's my next, where am I going next? I'm going to go to the guarantors. They both had fantastic jobs, both, working outside of that property. They're planning on building their portfolio of properties. So it was a good opportunity where she really didn't want to be, okay, I need this, into this investment property. I was able to get it done easier, but she had to put more money down. Were her terms exactly that 30-year fix? No, but there's none of that. Do you have the 6 or 9 month reserves like you're talking about? So it really is looking at the property and then kind of looking at the guarantors after that. Does that make sense? Does that answer the question?
Correct me if I'm wrong, Amy, but Jordan, just to clarify, I think one of the reasons for the shift in mentality is in the scenario you described, Jordan Becker is not the borrower. The borrower is Becker Industries LLC. It's an entity.
Yeah.
And then the other way the bank gets around that is they're looking at what we call debt service coverage ratio. They want to know how much income does the property bring in? What are the actual or realistic expenses of the property? What's left at the bottom line? That's your net operating income. And they want to know how many times will that cover my debt service? And they typically want that to be like 1.25 or better. Correct me if I'm wrong, Amy.
Correct.
But what that tells them is even with a vacancy, even with a fire, even with some type of stress on the property, you're going to be able to cover the debt service. And if you can do that, everything else is, relatively easy. But in that scenario, you're not the borrower, you're the guarantor. So the property carries the note. You just say, hey, I'll pay it if the property can't. So you're very much in a secondary role there as opposed to being the primary borrower. And Amy, you had on a really interesting point. Go ahead, and then I want to bring something else up.
No, go ahead. You're good.
No, you mentioned that we're so accustomed to saying 5 units or more commercial, 4 units or less residential. But you brought up a great point that if you own a triplex or a fourplex in the name of an LLC or purchase it in the name of an entity, there's nothing that says you can't use commercial financing for that acquisition. And in many cases, just like you said, maybe you should compare. Well, 30-year fixed is wonderful, but if they're going to make me have 6 months of cash reserves in the bank that I can't touch and jump through all these other hoops, maybe in some cases commercial is easier, and it is very situational. But that's a great point that you're always, you can't do residential for 5+ doors, but you can do commercial for 4 or less. And that's a great distinction that I think we sometimes forget about.
Absolutely. Yeah. I went back and forth with her, and I brought in my mortgage partner with Republic Bank. And in the end, she decided to go on the commercial side. She didn't want to be hassled about, every piece of paper and every. The residential side, unfortunately, because of the crash, has so much, due diligence and compliance behind it in order to protect the consumer. But when you're buying an investment property, you can go there. And yeah, the terms are great, 30-year fixed and this and that. But on the commercial side, you do have the opportunity, like you just said, that was a great point that you said. This is the business. We're going to still look at you personally. We want to make sure you're paying your bills, you're responsible, you have some equity. We want to make sure that you have something to back this property up. But at the end of the day, it's really about the property. And I think that's where, when you're getting into the your first investment property, you kind of have to flip your brain a little bit. It's, yes, you have a job, you have this, but we're really looking at the property. Can it support itself? And after that, where are we going next? But the bank, I always say this to clients and they kind of laugh when I say it. The bank doesn't want to own property. The bank doesn't want your property. They want to do good loans that they know are going to be paid back to them with an interest rate. That's how a bank makes money. The bank doesn't want to own a multifamily 8-unit that they have to cut the grass and manage the AC units. They don't want to do it. So we want to make good loans in order to, get that interest rate. And we want the business to be successful. And you have to think about it. That LLC you're setting up for your multifamily is a business.
Absolutely. And one other sort of tie in, we talk a lot, especially on the residential side, about should I title the property in my personal name so I get residential 30-year fixed financing, or should I put it in an LLC, or can I put it in the name of an LLC after closing in order for liability protections, etc. But, and correct me if I'm wrong, but my assumption is that Republic Bank isn't making many loans to individuals or sole proprietors. Almost all commercial real estate loans are in the name of an entity, a corporation or an LLC.
So yeah, it's really mixed. I would say most of the things I do, I'd say 95% is in an LLC. But just to give that same example of that 4-unit in St. Pete, they decided not to put it in LLC, but they also have trust in their name and they know that they're protected under other things. I would say that if you have insurance, a lot of people say, oh, I needed an LLC because if someone slips and falls in the apartment, you don't want them to sue you personally. Whether it's in your name or not, your insurance is still going to cover it. So again, that same person that was, 4 units could go either way. I said, do you want to set up an LLC to go over here? And they actually didn't. They put it in their personal names. And I can still do a commercial loan in personal names. I think it's really up to your accountant and how they feel you should structure your tax returns and your finances and how well you're protected on insurance and things like that. I think it really comes down to your accountant on that one.
That's a great point. And I actually didn't realize that you do commercial loans in the name of an individual. It actually sounds so much easier than residential financing. And one of the things we talked about last week was for self-employed individuals, business owners, residential financing is tough. They run you through the ringer on underwriting and, like you said, all these compliance, and it can take 2 months to close on a simple refinance, and it's a painful process, all the paperwork and things they make you produce and the reserves they make you hold. So that's a great point. I was just saying, I don't see any other hands up. I think we're coming up on an hour. If anybody wants to throw a hand up or throw a question in the chat, we have a few more minutes. Did you hear the part where I was talking about residential financing and how painful it is? Okay, I wasn't sure when I was on mute.
It's painful, and I joke with my husband all the time where I'm like, commercial lending, I'm like, it really is not as painful as a residential mortgage. We want your financials, and we do ask for obviously documentation, but we're not, my counterpart that's in mortgage, she's like, right now, if you handed me a bank statement that was 30 days old, I'd have to ask you for a new bank statement because I need something that's no longer than 60 days. And if your loan keeps kind of dragging on for whatever reason, they're going to keep asking you for stuff. Where on the commercial side, it's approved, you go to appraisal, you get your survey, you keep moving, and you're closed. We don't keep going back and asking for other things. So there is some benefit to on the commercial side. Again, some of those things are in place to protect the consumer on the residential mortgage, and I think they're good. But at the same time, they can, especially when you're an investor, it can be a headache.
Absolutely. Well, I don't see any other hands up. Amy, I know you have multiple things going on today. I want to thank you so much. I think this was great info. I mean, I learned a few things today, and I'm sure everybody else did as well. So thank you so much. I hope you can join us on some future calls, and we'd love to have you on again in a couple of months for a new group of people to talk about commercial stuff. Thank you, everybody, for participating. If you want or need Amy's contact information, I know it was on the screen earlier, but you can always reach out to me, and I'm happy to email it to you or share it with you. Otherwise, everybody have a great weekend, and thank you again.